Hello and welcome back to our series 100 questions we've answered for our clients. Today's question is, should I leave my old retirement account, my 401k, with my previous employer? This is a great question and it's one that we often address with both retirees and pre-retirees. In today's day and age, people are switching jobs and switching companies more often than they ever have before. The average person may work at 5 or 7 companies between the beginning of their career and the beginning of their retirement. Our advice is always specific to our clients, but often we're trying to help advise people to consolidate those old 401ks or old 403bs into one individual retirement account or one Roth individual retirement account, a Roth IRA as most people call it. The reason for this is a couple things. One of them is that it's consolidation. You know where all of your assets are. So if you've worked at 5 different companies, when it comes time to retire, you don't have to track down different amounts at different companies and different custodians. One of the scary examples that I've seen recently with a client is we went looking for him for a previous 401k that he had worked at a company 10 years ago. We could no longer find it. The company that was listed on the statement wasn't even in business anymore. So it took a long time to track down this account. Had he previously rolled that over into his IRA, we'd know exactly where it is. So one of those reasons is consolidation, especially if you plan to work at a lot of companies over the course of your career. The second one I think is more important, and that's to make sure that all of your horses are pulling in the same direction. What do I mean by that? That means that if you can consistently consolidate your old 401ks into one individual retirement account, your advisor can specifically manage that for you to your retirement timeline and your retirement goals. If you had worked at a couple of different companies, maybe the first time you set it up, you were younger, you set up a really aggressive allocation, 100% in stocks, all in the US. Maybe by the third company, you realized, hey, I want to be a little bit more conservative in my 401k, and you realized that, hey, I need to own mostly bonds in this 401k. Well, those two accounts, although they're both for retirement, which is one goal, they're pulling in different directions. And so we don't have a way to actually make sure that those are best aligned for your retirement goals, your income needs, and to make sure you can live off of that portfolio for the rest of your life. So it's really 2 things here. The question is between you and working with your advisor inside of your financial plan, but you need to address the question of consolidation and then also making sure all of your horses are pulling in the same direction. Thanks for the question, and we hope to answer another one soon.